How many lights? Oh, you ready? Okay.
This is Marcus Whitney's audio universe.
Like, you got to do the work. You got to show up and just do the work.
Yo, happy Monday. What's good, everybody out there? Another episode of Marcus Whitney Live, and highly anticipated return of my good brother. We had to do it, man. We just had quarterly earnings, and there is so much confusion and so much good stuff to talk about that we're just going to jump right in. So right back to it, like we never left. My man, Charles Winfrey. What's up, brother?
We're doing well, man. What about you? Let me first of all, let me start. The last time we were on, we talked about the book. I was congratulating you on it being released. Now, let me congratulate you, bestseller status. We knew it was going to happen. Rave reviews. I'm just happy for you. Proud of you, man.
Thank you, man. Thank you. Couldn't have happened without support of people like you in my life, man. So I appreciate it so much, man. Let's jump right in. I want to take this entire half hour and I want to get to it. So first things first, we just had quarterly earnings. Okay. And we also had some important numbers that were dropped on us. First, 32% shaved off the GDP of the country. I'm not even sure people even understand what that means. So from your perspective as a financial advisor, when you see a number like that, you know, you're looking at all these things, you know how interconnected all these things are. When you see 30% shaved off of GDP in the United States, what do you think?
Initially I think about how we have to have more stimulus because it's a direct correlation to people are not spending money. But we also have to ask the question, is it because they do not have money? So when we look at 17.8 million unemployed through July 17th, and then when we look at those numbers and we put everything in context, that can help us make sense of it all. So for many of us who were waiting on these numbers, we were not really shocked. You know, we knew it was going to be grim. That's why when we go back 2 months ago, when we had this conversation, we were already in the mindset that it's going to be slower than many people even believe or want to believe. And so that just confirmed it. And so I even believe we'll probably have another pullback, if not this month, by September, definitely as we get closer to the election. And so it just speaks to the long recovery that we will continue to have. Chairman Powell said that last week. It is going to be a slower recovery. That's why the Federal Reserve is doing everything that they can. And so we were not shocked by it. For some, the numbers were a little bit better, maybe than they expected. However, it is just August. It was just July when it came out.
Right.
So we still have the rest of the third quarter and the fourth quarter. So that's how we got here.
So that's a great segue into what we experienced in Q2. And I'm just going to tell you what I remember from headlines, you know, best quarter ever in stock market history in terms of the return. You know, and I did recently see that the Dow took a 500 point hit. I think towards the end of last week, that happened on some numbers that were released. That might've been on the GDP numbers, but, you know, we were talking about a V recovery versus a W recovery. And, you know, I think, you know, when this whole COVID-19 thing hit at Jumpstart, Vic and I started doing some modeling and, you know, we were basing everything on a first wave and a second wave model, not knowing that we just have been on this sort of first wave that is just continuing. And it's not going up continually, but it certainly never went down, right? And so it's very difficult to correlate the data points that we're getting with the performance of the market, right? It's very, very difficult. You know, where do you stand today around whether the V versus W recovery models are even the right way to think about this, right? Are those even the right frameworks to think about how recovery is going to happen.
Yeah, so let's go back to our conversation in June. And for those who are watching maybe for the first time and they weren't part of that conversation, when we talk about a V shape, think of the letter V. You think of how you will start in the corner, come down, then come back up. Many economists were anticipating that that is what would happen to our economy. We had that quick drop in March, and then around second quarter, we would see that uptick, but it would be an uptick that would continue. So if I go off of what you said and what my belief still is, even 2 months later, is that we will have more of a W. It came down. We saw a spike, but I'm preparing, and we've prepared all of our clients for another dip. So that when we do come back around, we will hopefully have some stability, consistency. Marcus, you know the business cycles, you understand economic cycles. I've been trying to describe this to our clients in the way that Walter Brueggemann is a theologian, he's an author, and he talks about 3 phases of life. He talks about the orientation, the disorientation, and the reorientation. So if I can use that, January and February, orientation. Life was good. Market was hitting record numbers. This is going to be a great year. March comes and we enter disorientation. We have to go on shelter lockdown. We don't know what's going to happen. We can't see family members. It's just difficult for us to process, disoriented. We move along in that process. Now we have to wear masks. I even ordered some face shields last week. So, hey, look, just that's where I am right now, okay? So we're still in this disoriented state. And let me tell you why this disorientation is really hard for us to understand. Because on one end, we see the market improving.
Right.
But on the other end, we hear about Lord and Taylor filing for bankruptcy.
Dropped this
we hear
morning.
About all of these other companies who are continuing to say, we don't know if we'll be able to weather the storm. Now, let's put that in context. Many of these companies are retail companies.
That's right.
I received a message yesterday. Maybe you saw this in your home state, in New York. Now they have retail companies who have had their rents slashed to like $700 a month just to keep the retail spaces open. Like, where in the world would you think Madison Avenue, these major, it was a staple to have a store in this arena.
Yeah.
And now, in order for you not to leave, we're going to try to give you some relief, $700. So that tells you how far and disconnected we are from where the market is moving to where most people feel the overall economy is. So if we go back to our conversation in June, what is still the same?
Yep.
We have to remember the stimulus that was pushed into the market is what has helped prop everything up. That's why there's a need for more, because what we did see with the GDP numbers is that even if I have the money, people are not spending it.
Right.
And so that is why our concern is, hey, we need people to get back to spending, because the way our system works is based off of producers and consumers.
Right.
And we need both of those working together. So we still feel it will be a W shape, but I think as we go through this disorientation, we're going to have to get adjusted to the reorientation. And the reorientation is going to be, what is the market going to look like? What companies are going to survive? What companies are going to thrive? Because Marcus, you know this, you're in this world, you're immersed in it. But when we think about companies like Uber, Groupon, Square, Airbnb, that all started out of the recession of 2008 leading into 2009, to me, that's the reorientation we need to prepare for. So this is where we are. The way that the markets work, typically 6 months are already factoring into the return. So when we were in March, they were already looking at where we are now. Where our head is, we're already looking toward 21 and 22. 20's almost over. If we have an uptick, might be a slight, we'll probably have more pullback. So if we're looking for this growth and this gain in 20, we've gotten what we've gotten in that second quarter. What we're looking toward is, okay, the next horizon, the reorientation. What is this going to look like when we come out of it? So we've got 21 and 22. And really, Marcus, you know this. This is where really a lot of employers are looking. They're
Yes.
already thinking like, okay, what's our Q1, Q2 plan
Right.
for 21 and beyond?
That's right.
So that's where I'm trying to get people to say, okay, I know this still hurts. I know this is uncomfortable, but let's kind of shift our perspective a little bit to say, when we come out of this, what's the reorientation we have to go through?
So to that point, when everything first started going down, and you and I, it felt like we were talking every day.
We were.
You remember that I was reading and watching a lot of Ray Dalio stuff, and he had that interview that he did with TED,
Yes.
and Chris Anderson, founder of TED, asked him the question, which companies are going to be successful, coming out of this window of time, and he basically said, that's the beauty of this. There's going to be two kinds of companies that are going to be successful coming out of this. One are going to be the meat and potato companies, right? And we know what those are. We got to have food. We got to, we got to have our plumbing. We got to, it's the basics that no matter what, you need it. It's going to be there, and we have to have it. It's a necessity, right? And then he said, and then there's going to be the innovators, okay? And the but he had some very key descriptors when he talked about the innovators, right? So one of them was that they had the balance sheet, right? Yeah. They had the balance sheet to be able to navigate and be able to, quite frankly, invest in a window like this, right? Yes. And so with that, I just want to bring up, you talked about retail, and yes, we certainly are seeing a ton of contraction in the retail space, but really we're seeing a ton of contraction in the brick and mortar retail space, right? Because Amazon's Q2 revenue was up 40%.
Right.
40%. Right.
Yes.
And the growth, quite frankly, is not just in the Amazon level. We're seeing Shopify, a software as a service company, experiencing significant growth because so many brick and mortar retailers had to quickly be able to turn on an online retail presence, right? That's in order to keep things going. And Shopify was a fantastic option to get up and running very, very quickly. Obviously, the tech stocks had a very, very good quarter. Right. And, I guess, Google / Alphabet's the only one that stumbled a little bit with their ad dollars coming down a little bit. But generally speaking, the tech stocks did fantastic. And so, I just am reminded of Ray Dalio talking about the innovators. And, when we look back throughout history, whenever there have been these massive moments in change, often a pandemic or sort of a global crisis of some form, whether it be a war or a virus or something that causes a major shock to the economy. There are winners that emerge from it, right? There are winners. And it does feel like the tech companies were really, really well positioned for this moment in time. I know we've talked a lot about the tech stocks. What is your general feeling about sort of where they stand today and going into the future?
No doubt about it. So, you brought up the Ray Dalio interview. I wrote a blog about it. I think what was so important about what Dalio said is that we continue to see the companies that are thriving in the midst of this pandemic are not just the innovators, Marcus, but when we look at their financials,
right,
they're the ones that are strong in terms of cash positions. When we think about Tesla, who has about 3 billion orders for their SUV or the automation vehicle, that whenever it's ready, they already have $3 billion worth of orders that are not even added to their cash positions right now when they tell you where their financials are. So when we look at the companies that are growing, when we look at what Apple is doing just this morning, when we look at they've now reached the $2 trillion level in terms of capitalization, right? We know on a cash hand, Apple is strong. When we look at Tesla, we know that they're strong. When we look at Amazon, we know that they're strong. So a lot of people have been wanting to compare this to 2000, 2001 and the tech bubble. Well, what we have to remember and what the difference is, and this is why I'm glad that we have this platform, Marcus, because there are many people who I feel are going to miss out on this opportunity of getting their education of where to invest their money into solid companies that not only have a proven track record so far, But if you will read their earnings report, so I'm glad you brought up earnings, right? So earnings is still going on right now, where we're going to hear this week. We're going to hear about Berkshire Hathaway on Friday. We're going to hear from Square. It would be great if you can't get on a call, go out on the web and read their earnings report. Go to that company's website, click down to investors. You'll find everything that you, and read about these companies. And this is the reason why that's important, Marcus, because when you understand the vision of the team, the leadership, let's look at AMD, the female CEO, MIT graduate. And we look at how AMD in 2015 was thinking about filing bankruptcy. And now they are shattering every record. We have to say, hold on, what is unique about these technology companies in 2020 than what we saw in 2000 and in 2001? What is different is we've learned from our mistakes. And I would say that's the reorientation that we took from 01 that we can also take into 21 and 22. Because what is the good about this storm, Marcus, is that we're going to be wiser. We're going to make better decisions. We will know what to look for. And unfortunately, some companies that probably needed to die on the vine are going to create opportunities for more innovative companies. And so I see tech continuing to prop up whatever growth we see in the market for the rest of this year. If we look at what the S&P has done, like you said, when earnings came out, what drove that up? It was the tech-heavy S&P companies. The NASDAQ, when I was looking at it this morning, up about 27%. The Dow is still down -6.
Yeah, right,
okay?
right.
NASDAQ, it is going to be technology weighted. You got a lot of financial institutions in there. They're hurting right now. But it's the tech companies that are lifting them up. And so I think from an investor standpoint, what I want to make sure people are listening to us and say, don't be afraid, but get the knowledge that you need to know which direction you need to go in. I've got 3 or 4 texts this morning, like, what are you reading? What are you researching to know what companies to invest in? I'm like, praise God for these questions. Because people are not blindly going in, right? They know, hold on, I tried it one way, that didn't work.
Right.
What should I be doing? Because I'm looking at the reports and people are making money. What am I doing wrong? If we think about the guru, okay, the oracle, it is reported that Warren Buffett reads 4 to 6 hours a day. What is he reading, Marcus? Financial statements, financials on companies. It's even reported that he was reading, I think there was one interview I was part of where he was reading the 1970, 72, 73 report on Ford Motor Company. And he said he was just impressed with how they ran the company in that time and what he could look for in companies today that had similar models.
Right.
Marcus, we won't even go back and read the news from last week.
Yeah, that's right.
Let alone from decades.
That's
right. So what I want to encourage and make sure people are reading and studying for themselves, because I don't want them to hear me say, oh, go out and invest in the market.
Yeah,
no,
right.
Slow down. What I'm saying is, let's take this time, because if we see that these technology companies are not only leading the way, but are growing exponentially, that may be a train we need to get on. But you need to understand why you're on the train, because you believe in the vision of the leadership team. You know they have strong financials. You know, it's funny, Marcus, most people have an Apple phone, but very few people own Apple stock.
Right. Even though it's, but that might change because the stock split just made it
perfect. And that's one of the main reasons why, because think about the leadership. They want more shareholders.
Yeah, of course.
Not only to increase their value,
right,
but also so people can
are invested. Yeah, people are invested.
People are invested. So I'm glad you brought that up. For those who are listening, last week, Apple announced that they're going to do a 4-to-1 split. So basically what it means is you get a sale. So a house that was $400,000 has now been lowered to $100,000. Yep. That's basically what it's saying. So you want to come on in if you can. Now, let me do my disclaimer. Not giving financial advice. Please talk to your CPA, financial advisor. However, if you're thinking about getting in the market, there are many platforms, whether it's Robinhood, whether it's TD Ameritrade, whatever. we do not want you to miss out on this opportunity, because what a lot of people are doing, unfortunately, Marcus, is they're just focused on the negative and are not seeing the positive that's out here. Yeah.
There is a lot of activity that is happening right now. And, the political news and the news about the virus make it very, very difficult for people to focus on the markets. I have a bit of a left field question. I don't want us to spend too much time on it.
Okay.
But you brought up financial services companies, and a trend I have been noticing, and quite frankly, this goes right along with all the retail stuff, right? It goes right along with all the retail stuff, the brick and mortar versus the tech, is that you're seeing all of these tech platforms in very sneaky ways get into the financial services business, right? Apple Pay, Apple Card, Shopify now has Shopify Balance. So when you set up a store, you can have a business bank account. Okay. Amazon, obviously, right? Amazon Pay, Google, Square, there's Cash App, right?
Yes.
There's all these alternative banking models that are emerging that have integrated ways to purchase stock, to do dollar cost, averaging, to buy Bitcoin, right? What are your thoughts on the financial services industry? And the reason why I'm asking this is because while they have tremendous experience in the space, they also have these portfolios that are invested in assets that at this moment to me feel very fragile. And the one that I'm most sort of worried about is commercial real estate. You brought up the $700, lease payments, right, that are happening in New York, right? All of these bankruptcies that we're hearing about, at least the ones we're hearing about, there are many that are not, brick and mortar retails, but the ones we're hearing about, J. Crew, Brooks Brothers, you know what I'm saying? Lord and Taylor, Neiman Marcus.
Yes.
They're stores, right?
Yes.
And why are they filing bankruptcy? Because they got two big expenses they can't cover. They can't cover their lease payments, and they can't cover their payroll. Okay. And they probably can't also cover their debt service as a third thing that they kind of got that they're trying to manage. So what do you think about the tech companies from a financial services perspective? Because to me, this is the thing I didn't hear in the antitrust conversation, but we're going to get to that too. Man, all the tentacles that they have been putting in place to where, like, you're looking at your banks and you're like, man, the banks got all these mortgages, and you know what I mean?
Yeah. So very great question. So you're talking about fintech. So fintech is a sector for at least the last 15, 20 years have just been growing exponentially. So my concern is where does the regulation come in? Okay. There has to be a balance between your area of expertise, but then when you want to try to monopolize everything because you are so large and you have so many assets, right? And so you're right. There's one name you left out of the conversation, and that's Walmart. When we look at the financial services within the, like you said, the brick and mortar.
I'm glad you said that.
Walk in the store, like that is right in front of our eyes. You know, you were even, reminding me as we look at it from a health insurance standpoint, just how huge those companies are and how big of a players they play just in that industry. So again, we did not hear that in the antitrust conversation. Now, we know this is just the beginning. I'm concerned because, Marcus, what I feel like they're trying to do, and unfortunately some people will fall prey to, is, well, I'm already here. Let me just go ahead and just give them everything else. And so there's going to have to be a balance, because you do bring up the point about, well, how would the brick and mortar traditional institutions survive if we're moving now to a more digital age where people just feel more comfortable? Hey, I've been doing this for the last 6 months. I could get kind of used to this. I don't have to leave home, or I don't have to get in my car. So there's going to be a challenge with that. I think that's where the government's going to have to come in with some type of regulation. Now, I'm not saying dump all regulation, but we are going to have to find a happy medium. But I also believe when it comes to maybe profits and how they can really maximize profits on those platforms, that may slow down a little bit because your margins are still relatively thin. So it'll be unique to see who survives that. I think everybody's testing the water, right? And we know who's going to kind of lead it. So I think there are going to be some that will fall by the wayside. Others, the big ones that are at the table now, are going to be the ones that we're going to have to figure out.
Let me push you on that a little bit, because one of the things I've been thinking about there is, if you just look at Amazon is a great company to always try to reverse engineer, right? Because they just invest so much in R&D. The big story right now is how much they're investing in their warehouse technology, in their warehousing capabilities, right? But when I think about payments and banking, I think about fees. I think about fees, right? And I think about the fact that today most banking is digital, right? It's not paper. It's ones and zeros moving across the internet, right? And these internet companies have massive capabilities to handle this. And I think many of them are just sort of looking at it. When you look at the internet infrastructure that Google has, or that Amazon has, or that Microsoft has, that they're able to run cloud operations for governments, right? Yeah. If they can run cloud operations for governments, then they can run their own financial services business, and they can turn that line item that is an expense item today into a profit center. And so even if the margin is small, when you eradicate that expense,
I'm with you.
The margin shifts. It becomes a bottom line deal. It's not real. You know what I'm saying?
Yes. I think it also helps with those growth companies that are all struggling to figure out, how do we go to the next level? Right. Our share price has gone here.
Where's the growth? Where's the growth?
Yeah. Where is the growth? That's exactly right. That is another opportunity. It remains to be seen, because part of the reorientation that I'm thinking about is that when we come out of this, there's still, if we think about August, September, October, November, December, that's a long time for our government to say, well, how can we shore things up a little bit more, that in the event this happens again, what can we do to be in a better position? Right. And so I'm not too sure that we will not see something from now through March that may give us some insight of how they're trying to prepare for that. But I'm intrigued too. When this conversation continues of antitrust, I believe it will expand that far. I just want to know how soon, because you're right. It is uncharted territory that if we're not prepared for, it totally changes the financial landscape of our country, because it, like you said, it's just a flip of the switch. We can just turn this on. In fact, I read something, I think a few weeks ago, about Facebook and their platform of what they're doing with their stores. Yeah. And how that is changing the game. I don't use the store, so it's still, relatively new, but it's in that same vein that you're on, of how, hey, they see that this is the next next frontier. So how far will they go?
How can you not, when there's 32% contraction on the U.S. economy, and when you're looking at the companies that are going bankrupt, they're all blue chip retailers. That is just a massive all hands in for the tech companies, right?
You brought up one earlier. You talked about Shopify, but let's balance that with DocuSign. And is just right. So that's still in that range of
B2B. It's just B2B transactions.
That's all it is. Right. And so we have some interesting times that we are in. So we did this call last time in June. This is August. We need to look at probably October, circling back around, because then two things are happening. Beginning of the fourth quarter.
Yes.
A month out from the election.
Yes.
We've got a long way to go in 2020, right? Yes, we're not over yet, but there's still a lot of nuances and dynamics that will have major impact. So even when we say we're looking at 21 and 22, I mean, we still are forward of saying we've got to get through this year. There is a lot that's still going to take place. And we're just hoping everyone is using this type of information to say, okay, I see where they're going. Yeah, some things still unsure about, but they've given me some new things to think about and to ponder.
So I only want one thing from you, and that's a commitment that when we circle back in October, we're doing an hour.
Hey, man.
We got to. We got to do an hour.
I mean, I realized that last time, and today I thought we would be okay. But then you threw me the curveball, and I'm like, well, that was the show today. So, yeah, if you've got the time, man, let's do it. We need to.
Yeah, we're definitely gonna do an hour. But really quickly, man, get your plug in, man. Talk about your business and rollover mistakes that retirees make.
Yeah, so right now, unfortunately, that's the other side to what's going on. There are a lot of people who are losing their jobs. There are companies that are closing their doors permanently. So what does that mean? That means there are people who are unemployed. But for a lot of people, especially those who've been there 20, 25, 30 years, they were preparing for retirement, but they weren't ready for this subtle retirement just out of the blue. And so we've been able to, through our book, provide some resource and education, because that's one thing a lot of the 401k companies do not give you a lot of. And that's the education that you need post leaving your employer. And so our book is like a manual where people can have the opportunity to say, hey, before I move my money, what are some of the cautionary tips I need to follow to make sure I'm not losing thousands of dollars in penalties, taxes, or fees?
That sounds like the easiest sales pitch I can imagine right now, So everybody out there, go get that book and follow my man, Charles Winfrey.
Thank you, my brother. Appreciate you, man.
You can see him online at Charles Winfrey, rollovercompany.com. That's where you get all the information about his company and what he's doing. We will bring him back in October for a full hour because we just cannot get it done in 30 minutes. We can't.
We try,
but we can't get it done.
All right.
Create and Orchestrate the book. Go grab it if you haven't already. The podcast, Marcus Whitney's Audio Universe. Everywhere that you listen to podcasts, you can follow me online at Marcus Whitney everywhere. And that is it. I will see you tomorrow for another episode of Marcus Whitney Live. Until then, let's build a new normal, y'all. Peace.
Thank you for tuning in to Marcus Whitney's Audio